And the very best thing about this model is the fact that it almost always offers a 1 to 2 and appears the exact same way every single time. What's up everyone and welcome to today's video, where in this one we're going to be going over the final hour strategy and model, how we trade this, how many pips it offers, and how many times a week this occurs. So to break it down in simplicity, between the hours of 3 p.m. New York and 4 p.m. New York, we basically want to see the 2022 model present itself. This can obviously be partnered with a bias which increases the probability, but doesn't have to be. So let's dive straight into the first example and lay out some rules for us before we get started on the model. So the first rule is that the 2022 model must form in between 3 p.m. New York and 4 p.m. New York. So within this time frame window, we must see the 2022 model present itself. Ideally, we want the shift to happen inside the time frame window, but this part is not necessary. The only thing that is necessary is the fair value gap that we are entering off of must form in between this hour. So in this example here, as you can see, building up to the 3 o'clock mark, we have accumulation, and then we get a leg down and a shift in market structure. When we break past this low, that is our shift in market structure. And then I like to take the high of the move that started the shift to the low. And if you look at this, we have, of course, we always want to enter off a premium when selling short. So if you take the first fair value gap between the 50% level and 100% level, as we want to be in a premium. So the first gap on a 2-minute time frame would be this inside here. As you can see, price wicks above. However, our sell would be after the shift, and then we come up to a premium. Your stop loss can go above the third candle in the fair value gap formation. However, I'll put it above this swing high over here. So that would be our entry, and then we can target a 1 to 2. About a 1 to 2 down here, and as you can see, if we hold all the way, we eventually hit take profit down here. So this shows here how we wait for the shift after 3 p.m, wait for price to return to a premium, and then enter off the fair value gap as we would usually on the 2022 model ICT already has on his YouTube. So the key factor to this model, as we can see here, is the time frame window. Before all the institutional traders stop trading for the day completely, they want to give one last move before they fully stop trading. So this is when this happens, and they do it in the most simplistic way possible, which is of course the liquidity grab, shift, and then fair value gap entry, like I show you here. This model can offer you 5 to 10 pips easily, and it is, I find, the easiest way to find a 1 to 2 in the marketplace. Now again, we are here on ES, and I want to show you the bigger picture perspective of this example as well. So we're on the daily chart, as you can see here, and we had this fair value gap inside here which price came into, mitigated it once, twice, and then a third time we opened in the gap. So as our momentum was bullish and we broke this high here, I was expecting price to continue moving up. So if we dive down into the framework for our final hour model, as you can see here, we have 8 o'clock New York time marked up. And now remember, we're looking for the 2022 model to form in between this hour. The 2022 model is simply a break of structure, which can happen before the hour, as we have here. A break of structure and then a fair value gap to form, which we want to enter off of. Now let's see if we can get a gap to form. As you can see, we have a big leg up. So for now, this gap inside here, you could have bought off, but you may have missed that. This gap, because it formed at 8, this gap is still valid. So I would look to, now prices ran without us, that's fine. This is still a valid entry. I would look to put your stop below here, entry off of the gap on a return to it. Of course, we aim for a 1 to 2. easiest way to catch a 1 to 2 this model is. And then let's see if we can get a re-entry. There's a gap there, however I would wait for this one to hold. Why this one? Now if we take our fib, so it should be the other way around. If we take our fib from the low of this swing to the high, this gap doesn't actually start inside the 50%. If you see here, it doesn't start, the start of the gap is not in a discount. So I would wait for either a return to the order block or this gap inside here. And as you can see, price comes down. Now we are in the trade and we are only aiming for a small 1 to 2 as we are scalping using this model. And then as you can see, price lags around a bit. Remember, this is the final hour and then we eventually hit TP. But I just wanted to say, remember, this is the final hour of trade. And so if you're put into the trade and then price becomes a bit not sloppy per se, we don't want it too sloppy and it's just hovering around, like if we got in and then this bit of price action was the whole thing, then that is not ideal. You could probably pull that trade. But I don't want you to worry about a bit of choppy price action because we are in the final hour. You have to trust that the model is going to play out, the conditions are right, and you have to stick by it. If you have a model that's back tested and proven, and then it plays out in front of your eyes, you will be more prone to trust that model rather than to pull it early and then miss a potential trade. However, if the price action is too choppy throughout the whole thing, then sometimes it is good to cut losses. However, in this case, as you can see, we chopped around for a bit and then eventually expanded to our 1 to 2 target. Exactly the same model, expansion, 2022 entry model inside here, a gap in a discount for buys and a premium for shorts, entry, and then aim for a 1 to 2 and you have your nice 1 to 2 to end the day on. So this model also is great for anyone who works, or let's say you just want to limit your time on the charts, then this model will be perfect for you. I would say this model probably presents itself 2 or 3 times a week. So imagine just on a 100k funded account, if you caught this move 3 times a week, that is about $6,000. Obviously take into account the 80% profit split, and then so on and so forth, comes to about 4.5k you're taking home each week just trading one model, and you're not worried about catching every other move or catching, different pairs which are moving. You just focus in on your model and do what works for you. Now, diving into a NQ example, I wanted to give a few for ES and a few for NQ. If you look here, we have 8 o'clock marked up, and then in this 1 hour price action, I just want to frame the actual trade for us. So our framework will mark up now and then dive into the actual model. As you can see, we have this gap here, which has a inversion gap on the other side. So if we pull that across, as you can see, this inversion gap comes across and we mitigate it on the 8 o'clock open. So 8 o'clock runs up into the gap and we are also inside this larger gap. And if you look here, we have an imbalance at this low. So that could be our draw on liquidity. We wick above these highs, taking out this liquidity at 8 p.m. It doesn't actually mitigate the inversion gap yet. It does later on and then runs. But either way, we are trading inside this imbalance, which is why we can look for sells, and we have wicked above these highs here. So our draw liquidity will be this gap and this low here. Dive into the 1 minute chart and actually look for the model itself. As you guys know, very simple model. You all know what we're looking for. As we open up on the final hour here, it should jump out at you straight away. So we have open up and then run up into and above these highs. Didn't mitigate the gap yet, which is fine. Of course, we do that later. But our focus is over here. Now we have sells in mind going into the final hour. So we want to see the run up and then the drop lower. As you can see here, we get the drop lower past each low. You could use this low or this low, it doesn't matter, we ran below both. And then I just want to give a little tweak to the model here. As you can see, there's no gap inside this bit here from the 100% to the 50%. There's no actual gap inside there. So a little tweak to the model you can add if you feel confident enough is up close candles in down moves supporting price, or down close candles in up moves supporting price, i.e. order blocks. So from the 100% to the 50% mark, I want you to look inside here, this leg of price action, see if you see any bold green candles. And as you know, we have this one here, which is perfectly inside, the body of it is inside the 50% mark. So we look to use the bigger, ICT calls them chunkier candles, as we have here. So we would use this candle here as an entry, because we have the swing high to the swing low above 50% if we're selling, and then we mitigate the order block. You would take a sell from here. Stop loss you can put above the swing high, and then aim for our usual 1 to 2, and as you can see here, perfectly gives us a 1 to 2. So this is just a little tweak to the model. If we get the displacement lower past a previous low and then no fair value gap to enter off of, then you can of course use order blocks if you feel confident enough. If you don't feel confident enough, it is fine to miss a move. You do not have to catch every single move in this market. You should feel confident enough in your model to be able to walk away from a potential losing trade or a trade that you don't see as per your model. So if it looks a bit different to your usual setup, it's fine walking away from that. If you feel confident enough, then you can enter off of order blocks and trust that the final hour model will present itself efficiently and run to targets. I just want to point out here as well, you can see a fair value gap inside here, and look how the bodies respect this fair value gap. Now this is the 1 minute time frame. Price is fractal, as you all know. So the same signatures in price you'll see on the daily time frame will happen on the 1 minute time frame. And that, notice how the 1 to 2 presents itself perfectly to the fair value gap down here, which holds perfectly before expanding higher and eventually run into that inversion gap on the 1 hour. Remember, signatures in price we look for lines up perfectly to the gap, and this isn't a coincidence. So as we end the video, I just wanted to thank you all for all the support recently. It's of course very encouraging to continue to put out videos for you all, and as I will continue to do so. So signing off on this one, I just want to say thank you. Keep supporting and liking the videos. If you did enjoy this one, please do like and subscribe. Leave a comment with any suggestions for videos, or message me with the links below. And yeah, I'll catch you in the next one. Thank you for watching.